Taking a look at the fears on a global level, it seems that one cannot ignore the impact of a US downgrade and, of course, peripheral Eurozone debt. Do you think that we are perhaps disconnected from these issues? Yes, we experience it on the equity market front, but do you think that the real economy is safe?
Well, this is what you have to decide at the end of the day. Is it important for the South African banks, the South African economy, what happens with the US downgrade? And in fact, a lot of the market reaction we've seen over the last few days is not actually, I would suggest, on that move from S&P. It's actually on global fears around basically a global trade shock, a negative shock to global growth that's going on. Surprises to the downside in data numbers coming through that is actually much more scary in a way and much more hard to fathom, if you like, than actually a shock on risk premium from a downgrade. And for South Africa, I mean, really the thing policymakers should be worrying about is the fact that so much of the recovery so far has been from external growth. Internal demand is still very sluggish and very fragile, and that's really where they have to be worrying, is that external demand picture.
Okay, well, let's take a look now at what is happening in the real economy in South Africa. We know that PMI has really disappointed. We are contracting for the first time in many months in South Africa. We know that the Reserve Bank has actually come out and said that South Africa's consumer is looking quite strong, and this is where the focus should be. Do you concur with that? Do you think that the South African consumer is looking slightly stronger and in a better position than it was before?
In recent months, yes, but I think we have to remember there's a lag between the shift in the external dynamic and what goes on internally. So we could well see a patch of stronger consumer in the next couple of months, but that may well turn back again. And you've already seen export numbers recently have taken a more negative turn, and manufacturing number today, although it's priced the upside slightly, is still at very disappointing levels in growth terms. So we have to remember there are lags going on here. We have to think about what is the overall macro picture. Are we going to recover back from a soft patch in momentum, or are perhaps we in a more meaningful lost decade type situation here, given the amount of global deleveraging that still has to go on?
Okay, well, taking a look at monetary policy on a global level, we know that a lot of the developed nations do not really have a lot of ammunition, but perhaps South Africa is in a better position. Yes, we're sitting with interest rates at 30-year lows with a repo rate of 5.5%, but the reality is, if something really bad does happen, that we do have an opportunity to cut further. Do you think that that could be a likely scenario if we do see a massive blowout in the developed world?
Well, this is exactly the interesting thing about South Africa, is that last time around in the last year or so, we got this virtuous cycle of lower rates and dovishness, basically leading to a stronger currency as we saw bond inflows. The key ingredient to that was obviously QE2 at the time, and I think there could well be a repeat of that again. We do think that Ben Bernanke will come out in the near future and provide us with QE3. He'll keep the punch bowl at the party and pour in a little bit of extra something strong as well to keep us going. And South Africa during the last bout was the main recipient, or the main, most obvious in headline terms in terms of the strength of the currency, recipient of many of those fund flows. And that can well happen again. That's actually why we're starting to get slightly more positive on Rand here at these levels. But there is probably some room for the SARB to cut, albeit it will take some time for them to turn their forecast around, for them to become less concerned about headline inflation.
Well, Peter, tell us about what the international and foreign community is basically focusing on when they do look at South Africa. Do you think that they have relatively and largely been distracted by what's happening in peripheral Eurozone and, of course, by the US? Do you think they're taking cognizance of the fact that we're actually discussing the likes of the National Health Insurance Scheme quite extensively?
Well, I think at the moment, if we can decompose what's gone on this week, we basically had an initial risk shock. People who were long Rand at the time and long rates did take profit on those positions and close them out, and hence you saw quite a large and given it South Africa quite a violent move as well. But people in the longer term, if you think about tactical asset allocation, people do view South Africa still in a very favourable light in terms of policymaker credibility, both on the fiscal side and the monetary policy side. And hence we think when investors search for EM relative safe havens, South Africa will probably actually come out pretty well if basically Pravin Gordhan can prevent the fiscal balance from blowing out too far in any dip back in growth.